Hello, my name is Rob Noonan. I am a co-founder of Rialto Markets and your host for today's webinar. Today, you will meet our panel of experts who have led the way raising hundreds of millions of dollars using Reg CF and Reg A crowdfunding, as well as Reg D institutional funds raising for private companies. I will start off with Sherry Noonan. She is the CEO and co-founder of Rialto Markets. She heads our team of experienced Wall Street financial experts and foresaw the opportunity for crowdfunding after the Jobs Act and the opening up of private markets through secondary trading of private securities. The vision gave birth to our company to support high growth private companies in raising capital, at the same time encouraging a fast growing community of retail, accredited, and institutional investors. Rialto Markets has created its own secondary market alternative trading system, or ATS, for private securities. This month, Sherry was presented with the prestigious Instinet Positive Change Visionary Award at the 2022 Markets Choice Award on behalf of the company and its team. Second, I'd like to welcome Annie Pratt. She is the president of Atlas Motor Vehicles, an electric vehicle company which achieved one of 2021's fastest Regulation CF crowdfunding raises, securing the maximum $5 million target within 6 weeks. I'm proud to say that Rialto Markets provided the technology and infrastructure to support Atlas. Having achieved more than $30 million in crowdfunding already, Atlas also has a Regulation A raise open using Rialto Markets infrastructure technology. You may have also read that Atlas is now planning to go public off the back of this success. Next is Michael Jansen. He is the CEO and founder of the pioneering digital twin exponent City Zenith, which has raised $14 million since inception and close to $6 million towards its $15 million goal this year via a Regulation A investment offering. Recognition of the company's powers is highlighted by the innovation from the World Economic Foundation to join its influential group, WEF Global Innovators. City Zenith has also grown an investment community of more than 6,000 investors, helping the company sign many major contracts in the past year and partner with the likes of tech and energy giants like Amazon and Shell, and huge cities including Las Vegas, New York, Phoenix, and Los Angeles. Michael is a multiple award-winning entrepreneur. Recognition includes the 2021 Global Excellence Awards Top 40 CEOs list, placing Michael along major names in business and entrepreneurship, including Unilever CEO Alan Jope and VaynerX chairman Gary Vaynerchuk. He sold his previous venture in a partnership to Sequoia Investment for 17 times its original investment. Finally is Paul Stannard, chairman of the World Digital Foundation. Paul has won over a dozen awards for his work in the media, marketing, technology, and investment, and has helped support many high-growth private companies through strategy, media relations, marketing outreach, data, creative content, paid digital marketing, and investor events. All are essential to building an investor community to support and rapidly increase the capital raise at the same time as building a brand and consumer pipeline. Overall, Paul has raised hundreds of millions for technology, media, finance, and healthcare companies in the United States and UK and around the world. He has been a speaker at the World Economic Forum Summit in Davos and is chairman of the not-for-profit organization, the World Nano Foundation, and the charity World Science Aid. Paul is also chairman of an alternative investment fund for life sciences. I would like to kind of set the stage here and talk about the private markets briefly. Crowdfunding has really exploded from about 8.6 billion in 2020 to over 13 billion last year. That's more than a 1,000% increase, and that's according to PitchBook. Forbes reports private securities markets are valued at 7 trillion in 2021 and forecast that to grow to 30 trillion by 2030. There are 27 million private companies in the United States alone, with less than 1% currently traded on a secondary market. We are very excited about the opportunity for private companies to offer shareholders the ability to realize value much earlier than was previously possible. One note, if you arrived a little bit late to the webinar, we are going to be recording it. You will be sent an email to rewatch it, and in the next few days, it will be on our YouTube channel. So I'm very delighted to welcome the panel. Annie, I'm going to start with you. Why don't you tell us about your technology and how your crowdfunding experience has helped get you where you are today?
Right on. Thanks, Rob. And thank you for having me. I'm really excited to be here. So Atlas is an electric vehicle technology company, like you mentioned. We're focused on really building technology solutions for work. So when we talk about work, we think about agriculture, mining, construction. These are industries that are forever, that are not going anywhere, and that really need technology to help them sort of continue into this next phase of electrification. And so that's what we're setting out to build. And if you're following the electric vehicle industry at all, you know, consumer electric vehicles are becoming more and more common, but the work industry is lagging. And the reason is the technology needed to support the use cases of towing and hauling and doing this really hard work, specifically for work trucks, doesn't exist at the battery level. And so that's where Atlas started, was really working to solve, how do we develop battery technology that can perform the way that gas and diesel vehicles do today? And that's what we've built in-house. That's sort of our secret sauce and the core of the technology that we've developed at Atlas. And we've been focused on work from the very beginning. And I think that focus has really translated really seamlessly into equity crowdfunding, because we really knew exactly what our target market was, and what better way to raise money as a company that's going to need to raise a lot of money to hit our goals over the next few years than to do it from the people who ultimately are going to be our customers, and that can validate everything that we're working to build. So our first Reg CF campaign was launched in 2018. That was back when the maximum you could raise in a regulation CF was $1 million and $1,070,000. And it took us a long time. It was a bit of a grind. But we were able to learn through that first raise exactly who our target market was, exactly what we needed to change as a business to better meet their needs, and exactly how to crowdfund. And that was sort of our first sort of toe dip into crowdfunding. And then, as you mentioned, we've done a handful of raises since, and have realized the power of the retail investor base. And while it's less traditional to be raising money from thousands and thousands of retail investors, it brings with it a really unique sort of synergy between your customer base and your investor base. And we have a ton of alignment there now that I think if we would have raised money through like venture capital or other private investors, you can sometimes not be as aligned. And so that's been really cool for us, and something that as we move into this next phase of Atlas becoming a public company, I think will set us up to be very different from some of the other companies that are going public this year.
Thanks, Annie. That was great. Yeah, the power of the retail investors has never been more clear than it is today. Michael, you've followed a similar path as Annie, and you have over 6,000 investors. You've raised tens of millions of dollars. Tell us how it's helped to raise City Zenith's brand in the marketplace. You have some great contracts with cities, tech, and energy giants. So just tell us about the army of people who are talking about your company.
The City Zenith Army.
Yeah.
Sounds like the KISS Army from the 70s. That reference might be old for some people out there.
Some of us know it.
Well, thank you for having me here. First, it's great to be on this panel with everybody, and everybody here has achieved a lot of success in what they do with crowdfunding. And for us, it was an experiment. The first time we crowdfunded was in 2019 in Republic. We did a Regulation CF, and prior to that, actually, we came to crowdfunding in the U.S. from the UK, where, as some people might not know, crowdfunding was bigger up until 2 years ago. Between 2015 and 19, there was more money invested via crowdfunded sources in the UK than in the US. That recently was overtaken. And that's because of the EIS rule, the Enterprise Investment Scheme rule in the UK, that allows investors there to invest money with attractive tax discounts for doing so. So the thing that, was we raised $1 million in 2.5 months. That really surprised me how quickly that could be done. And also we got this community around us. So that was the thing I wasn't used to, because I was used to having all these individual relationships with wealthy investors, to be very honest. Rob mentioned that Sequoia Capital put $15 million in my last business alongside Silicon Valley Bank. We took it from me and a phone to 750 people and sold it to one of the world's largest engineering firms. And now it's 10,000 people. So I've always known in this industry 10 years ahead of everybody else what was going to happen next. And I picked out the digital twin piece for cities, some time ago. But I admit it was earlier than a lot of people could comprehend. I was ready for it, but it was earlier for people. So, the marketing around the crowdfunding really helped to explain what we do to a large audience in terms of they can understand, which we were not good at. And to do that at a huge scale, suddenly we were on television across everything from MSNBC to CNBC, running ads and all these different, Paul was actually been my guide through a lot of this, because I wasn't quite a believer in the beginning that all this mattered. And today City Zenith has a global brand. We recruit people from all over the world, Lockheed Martin, Google, they come join us because we've been able to reinforce our messaging out there. And now that, we work as the company works on decarbonizing buildings and infrastructure at scale using a technology called digital twin technology. And with this movement towards decarbonization and awareness of climate change, a lot of really good people are quitting their jobs and joining the party to try to take on this problem in some ways. So we've attracted some amazing talent thanks to their knowing about us through the marketing as a part of this. So that was a surprise. And I never even knew the value of a brand, but when you have a value, when your brand actually has value, you can do all kinds of things: sign contracts, hire, recruit, raise money, things I didn't know about. That so definitely worthwhile. Difficult. We have made many mistakes along the way, and we keep failing, but we fail forward by and large. We learn and keep going. I don't think there's any secret sauce out there, but we do like to try different things to see what can work, and we're still learning. The good news is that we have enough investors now where, the pace of the round has really picked up, and we have the confidence of the American investing public, which took some time to build. Today, they used to have to call me. It was a long. Today, they just, they can go online and see 60 different things, and they just invest. And so all this is, been the impact of this, the marketing around the campaign.
Great, thanks, Michael. Paul, we've now heard from two companies. I personally think they're both amazing companies, and they've built, really, really great group of followers. I know you've raised millions of dollars for your own companies, and you've helped a lot of fast-moving private companies, some on this call. What would you say is the secret, if there is a secret?
Is that aimed at me, Rob? Sorry.
Yeah, Paul. Yeah.
Yeah, sorry. Yeah, I think it's one of the key things. We just heard from two very personable people leading their companies, and it's about engagement, staying engaged with your community. So even if it starts from very small beginnings, it's making sure that you stay engaged with them, because they are the secret source of this, really. Because if you stay engaged, they will advocate, and then more people will build on that. And then whatever marketing dollars you're putting in, the fuel to get it further into the air, they'll come in behind you if they feel they're on this journey with you. So it's not a set of forget. It never is really. It's a long road, and I got a sense that it's a road that never stops, because once you build a community like that, they'll find you contracts, they'll find you the next investor, they'll find you relationships with businesses and organizations you never dreamt of. So engagement, and the other thing is preparation. Rob and Sherry, I've spoken to you about this many times, but a lot of people, you know, you talk to that are thinking about this, that are asking for advice, you know, they might hear, oh, you need to do this, you need to get a lawyer, you need to get this, and you need to get that. But the preparation to ensure that your digital footprint in terms of your findability and your own reputation online when you start this journey has to be right. Otherwise, as people then go and think beyond what it says on your offering page and read what it says in the media about you and what people are saying on social media, that's what will help them make those decisions, whether they want to stay on this journey or join this journey.
Thanks, Paul. Yeah, I can say from experience that investors can be incredibly helpful, and the power of the crowd is really terrific. There are some questions coming in, but before I get to the questions, which I think I'll after this last question to Sherry, which is, in your experience in private securities markets, what foundations are needed to get started if you're an exciting private company thinking of crowdfunding? And if you can share how Rialto Markets plays its part in helping companies like City Zenith and Atlas. Sherry, I think you're on mute.
Thank you. Thank you very much. So thank you, Rob. We, Rialto Markets, we are a FINRA member broker-dealer, and we have an ecosystem of lawyers, auditors, transfer agents, and all of the payment rails, everything really in issuer needs to provide a complete solution for firms looking to embark upon a capital raise. As the broker-dealer, I think we really have a unique position to be able to really witness what's worked well for issuers. And we really find a few foundational items, and first and foremost and foundationally, get those foundations in place. So, you know, Paul talked about the digital foundations, the marketing foundations. Definitely that's important. The audit and the financials, very, very important. The legal construct, and I know all of these sound very not exciting. They're not exciting. They're incredibly important. If you're thinking about doing a crowdfund, frankly, if you're thinking about raising any type of money, they're all going to be very, very important. So making sure that all of that is done and in order. And again, if you're looking to move forward in terms of a crowdfund raise, the right type of a lawyer as well. Next, we found for the most successful raises, issuers that have a following or a community. And if you don't have a community currently, a willingness to build a community and a desire to build and work with a community. So what we find, and this has been really referenced earlier in the discussion, most communities really end up as sort of an army of advocates for companies and really help it along its journey. And next, really those issuers that are in industries or with products that resonate with people. So, that could mean anything from green tech, med tech, space tech. Those certain verticals really resonate and are really more crowdfunding, the crowdfunding journey. And, what we've really been seeing is a shift in people looking to invest in those areas that really resonate with them and looking to make a difference. And the last thing I'll say from a foundational perspective, for companies looking to engage in crowdfunding, it's really important to know that you have to invest in getting the word out, And that really means digital marketing. It's really important to realize that you have to constantly be curating new investor bases. So just because you have an investor base now doesn't mean you can't just rely on that investor base. You're constantly investing in growing what you have today.
Thank you, Sherry. We do have lots of questions coming in. Please keep them coming. There all seem to be great questions. Paul, I think this question is best suited for you. Peter Carter is asking, how much money and time does it take to get your crowdfunding offering ready? And when does this start to self-finance itself? And then I'd love to hear also quickly from Annie and Michael what they think as well.
Yeah, I think it depends on how much of a community they already have. But the foundations, to go into it properly from a marketing sense, you've got to have your reputation looking good online. You've got to be easy to find online, and you've got to have lots of good things written about you. And when you say, and that takes, that takes time, and having a good website that's easy, keeping your message simple so that the audience can understand it, because people don't invest in things they don't understand. So if you overcomplicate things and don't keep it simple, then you're going to struggle. So 2 or 3 months. And then, like anything, I like the analogy about like getting a great big jumbo jet in the air. It takes a lot of fuel to get that plane up in the air, and a lot of thinking and ingenuity, as well as technology. But once you get it up there, you've got to keep putting the fuel in. Otherwise, you will not be going transatlantic in your crowdfunding raise. You'll be crashing and then wondering how you're going to get back out of that ocean. And also understanding that when you hit bumps in the road, and knowing whether it's a bump in the road or whether it's a real challenge that's affecting either your message or the channels of communication, because when you're doing digital marketing, which forms a big part of this, you can exhaust audiences if you go at them too hard and burn them out. So understanding and engaging very early on and building those foundations in that first 3-4 months.
Annie, any advice?
Yeah.
Any words of wisdom?
I think Paul's spot on. I do think it depends also where you are in your crowdfunding journey and strategy. So the early days, right, your first raise, it's all about building that community and figuring out and experimenting with messaging and audiences. So what story are you telling and who are you telling it to, and what's working, what's not, and being agile and adjusting very quickly. But it takes time to figure it out and to run those experiments and tests. And so I would encourage people in the beginning to be patient and just really make sure you're set up to be able to track all the things you're testing at a really detailed level. I would also say in the beginning, when you don't have a community that's already supporting you, using some of these platforms for equity crowdfunding is a really good way to reach an existing audience and at least get started. For us, we started that way and we moved away from it because we've built this massive community at this point. But starting off with no community, some of these tools to sort of get lumped in to an existing audience and get your feet under you are a really good way to do it. And I would also say to Sherry's point about the foundation, about like audit and the legal side of things, I know that that's not the fun stuff. That's not what any of us are here to be doing. But if you can get that stuff in order and set up correctly early, it makes it a lot easier in future rounds. And ultimately, if you are on a path to become public, you're getting your training wheels under you to become a public company. So it's really good habit to run your company that way, but it is an investment up front.
Thank you, guys. There's a couple of very pointed questions to Annie and Michael, but before we do that, I have a question from Lucy Taylor for Sherry. As a serial angel investor in the equity crowdfunding space, how do you see the secondary market for private companies evolving? And can you tell me more about your alternative trading system, your ATS?
Great. Thanks, Lucy. It is early days in secondary markets for private securities. We're very excited for the opportunity because we really think it's critical for companies as they stay private for longer periods of time. It really gives companies the ability to provide their shareholders with an exit strategy that's apart from the corporate exit strategy path. So we really firmly believe that as private markets become ever larger and companies go and stay private for longer periods of time and raise money via crowdfunding raises and Regulation A raises more often, that this is going to become a growing theme. So our ATS specifically, we work across all private markets with both a central limit order book, so that's just a lit order book, as well as an auction methodology, and we're open directly to retail investors. We work directly with issuers, so we do not take orders from shareholders without sort of the issuer's consent. We'll work with issuers, and then that's sort of how we onboard the issuers directly. And finally, the last point is we work both across digital and traditional securities. And all that means is we work with both blockchain-based as well as just your traditional, paper-based private securities. So that's sort of how that works. But we really believe that as private securities mature, this is going to become more of a theme, and you'll see this much more commonly. So thanks.
I agree. Thank you very much. Michael, this is a question directed towards you. I'm a current Citi Zenith shareholder and have followed my money and watched the company's positive progress. When do you expect to stop crowdfunding? I'll add, if ever. And what are your only because we're always raising money. We never stop raising money.
I know.
And what are the next moves for your company? As much as you can say. The next one is for Annie, and she's going to have a similar issue on.
Yeah, well, thank you for that question. There's a similar question from somebody else about the focus. So this is a question I'm very happy to answer. Sequoia Capital backed my last business, so I'm very familiar. I don't know if many people on the call may not know who they are, but they're a venture capital firm based in Silicon Valley, widely regarded to be one of the top investors in the world. So I got trained by some tremendous people for many years. And I went through the entire process, and I know what that's like. And it's very valuable to a business at a certain point in its evolution. The struggle for businesses is that until that proof point stage, where does the money come from? And that's kind of the gap that crowdfunding fills. Now, traditionally, that amount of money people have been able to raise, that kind of almost friends and family seed money, has been, not a lot. Well, sub-million, a couple 100,000, 500,000, 50,000, you hear these numbers. It's not a surprise then that there are so many companies looking for funding in Silicon Valley that have single point application tools that you can build for 200 grand. What happens when you have a sophisticated platform that takes 10 million to build? Then you crowdfund. And by being able to do that, we've been able to build a platform that the likes of Shell and Amazon can use and defeat competitors like Autodesk and Bentley and Google and major people in the space, because we could afford to crowdfund and not have to worry about these traditional benchmarks for proof points before a product is ready to be tested. So I think you're going to see incredible innovations coming out of crowdfunded companies now, because they're able to do more than regularly, seeded companies. They can build better products. They can push it out further. They can expand more. So we're not even going to have a VC round, I don't think. We're going straight to a major investment from one of the world's top 5 energy companies. And, and it's because of the 6,500 shareholders we have, and the 15 or 20 or 30 new ones we get every week, that we were able to do this the right way and build the right product for the right market and exhibit the patience necessary to build a good company. When I was, when I was Sequoia there, I remember the board meetings. There's always the people in the room. Unfortunately, with generic investors, you don't always get experts around the table. I think we heard this, from her. She's got the experience at Atlas. Annie knows exactly what it's all like when you're working with non-aligned investors. So having, I put almost all VCs into a category I called spreadsheet investors, which means that they're not really investing in your business. They're investing in a spreadsheet that an analyst pulled and analyzed and went up to a couple of partners and they checked it out. And there's a whole process for that. It used to be that the VCs and the PEs were filled with entrepreneurs in the 80s and 90s and even early 2000s. Now they're mostly, a different crew, accountants and financial analysts. So the world has just changed tremendously. This is a very real thing. You can go very far. You can raise $75 million if you want to now in a year. So I think this is here to stay, and you're going to see some of the top companies in the country now using this type of methodology for raising money.
Yeah, I find it interesting what you say about the VCs. I feel like they've taken on the actuary tables of the insurance companies more than, investing in something that they necessarily believe in. They still do that, but risk has become a much bigger part of their equation. Annie, Terry Calloway is asking, and no one knows better than me and Sherry working at broker dealers. I know it's hard to talk about going public and future statements, and it's hard what you can and can't say. But he says, we have followed Atlas's extraordinary progress and read the news about your potential NASDAQ public listing. Can you tell us any more about the strategy?
I can say a few things. This, to your point, gets a little tricky. But what I can say is we have found that given Atlas's strategy and how much money we're going to need to keep raising to hit our goals over the next few years, it's a large amount of money. And the access to that capital, we believe, will actually become unlocked once we're public. What we're doing is very capital intensive. It's a hardware business. It's not a software business where you can spin something up for 50 grand. For us, a lot of tools just cost 50 grand. And so this is a long-term sort of journey for Atlas. And for us, it's been about, okay, where does it make sense for us to be raising money from and at what period of time? And so we're at this interesting point right now where we have actually created some relationships where we believe we'll have access to quite a bit of capital contingent on us becoming public. And so what's really cool about what we're doing is we're actually using a Reg A Plus to list on the NASDAQ, which is not something that's never been done before. There's a few companies that have done it, but it's unusual. It is essentially a mini IPO or an IPO light. It's not an IPO. We don't file an S1. But we have gone through the SEC review process on our Reg A Plus offering already. We've also been through that process a handful of times now with our other raises. And so we really know what that means. And we're able to utilize that and then work with NASDAQ and say, okay, what do you need from us for us to qualify as a public company? And once we have those two things, you can essentially list, and your public offering is your Reg A Plus campaign. So it's a really kind of seamless transaction for us, or transition, I should say, since we know Reg A Plus so well. But it's an unusual way to do it, which is also kind of the Atlas way of doing it.
Terrific. Yeah, I know that our ATS and secondary trading is a big part of our business, but we really are thrilled at the news that you guys are going public, and we're very much looking forward to helping in any way that we can.
It'll be exciting.
So Sherry, another question that I had for you that hasn't come in through the pipeline here is, can you explain to the audience the importance of building a community and having early supportive investors in your crowdfunding campaigns at key points to raising money?
Absolutely. So if you are a new startup and this is your first crowdfunding raise, and you're on the call and you're really looking for some advice on, how do you create that momentum? How do you create the FOMO? I know both Zenith and Atlas have sort of successfully navigated that. The very first time, sort of out of the gate, I would say it's really about identifying and harnessing a community, and within that community, sort of the key soft circled folks that are going to help drive the initial momentum, and then building upon that momentum to be able to jumpstart the raise and really be that first start to building the advocates that you're going to have as your core advocates. I also think, for the companies out there that are earlier startups that are looking at this as their first crowdfunding raise, I would echo what Annie said, is sort of be patient, because it takes time. And so to sort of expect that, you put the shingle out there and you think that you're going to raise, $5 million in 4 weeks, that's going to be very, very unusual. So it takes time. It takes time to build a community, and it takes time, even if you're speaking to, you've built a community, or you've got a following, or you have a soft circled group of people that are galvanized around your company. It definitely make sure that you're tempering that somewhat. But I think being able to build somewhat of a community, then leverage that with the digital marketing to help kind of create that initial momentum that you can kind of launch off of, really assist to jumpstart the crowdfunding campaign.
Thank you. There are several questions coming in from the audience that I'm going to try to bunch together. And Sherry, I think I'm going to start with you, and maybe you talking about, the fees that Realtor charges, how we do things. We're a self-hosted solution, and maybe Annie and Michael, you can talk about your experiences. But I'll read the question. The first is from Randy Smith. Can I start a raise on your platform for free? What are the costs? What are the value add compared to other equity crowdfunding? And then there's some other questions. Also, Randy Smith, how do we compare it to a Start Engine or a WeFunder? Or you don't have to talk about them specifically, but a platform versus a self-hosted. And then I'd love to hear, Annie kind of touched on this earlier about building the audience. And then once you have an audience, you can do it a different way. And then, Paul, my dreaded question is how much is marketing? But we'll go with that one last. So I'll start with Sherry.
Well, I was going to say, when it comes to fees, so anyone on here that, hasn't done a crowdfund before and you're going out, I think it's really important to sort of understand the fees that are sort of underway, and there's sort of list prices that you can get. And when you're talking, about, you need to sort of get the lawyer fee, the auditor fee, the if you're going to be using a transfer agent, and then from a broker dealer perspective, we charge pretty straightforward. It's a success fee. There might be a retainer up front, a setup fee depending on what type of service, but it can be anywhere. That the fee for a crowdfund is basically 3% cash, 1% equity. That's what it is. And we don't charge anything from everything's passed through when it comes to AML KYC charges, any kind of ACHs or wire fees, credit card charges. I think it's 2.85%. That's all passed through. But it is important to understand, because we have seen companies get, sign up, and then they end up getting a check, and they think that they're going to be getting, $30,000 in their bank account, and by the time all the fees come out, it's $2.11, and they're clearly unhappy. So it's important to understand not just the displayed prices that you're getting charged, but also sort of all of the fees that are coming out, no matter where you're going. And please shop around and look at it. I do agree with Annie's point. If you're doing a raise and you're starting sort of, to build a community, go somewhere where you can build a community and start to look at different investor bases where you can build that community. And I really would defer to Paul as the expert on being able to reach those investor bases. Now, in terms of all those costs, the one thing I left out is the marketing costs, because to me, that's the X factor. And it's kind of, Rob often says, do you want a Honda Civic or do you want, a Ferrari? So you can have, one or the other. And that's really the swing factor.
Annie, how about you? Do you have any, I know you talked about your previous raises and using platforms. Do you have any advice or insight into?
I think using platforms is a really good way to start. It is going to cost a little bit more in the beginning than when you get down the road and you have a community, so you have a little bit more leverage and you can make these trade-off decisions. And I think on the marketing side, at least for us, we've learned that you can start testing at a very small scale. So I wouldn't let the marketing spend scare you. Like, it's not like you have to be spending $10,000 a day or whatever it is. You can run very sort of micro tests on Google and Facebook and Instagram or whatever these platforms you decide are best for your business. And then once something's working, you just pour fuel on it. So for us, we always have a series of tests going on, and as soon as one works, we double the budget, and then we double the budget again. And you watch the ROI sort of increase and then plateau, at which point you level off your spend. And so I think it's super important to have your marketing, or whoever's helping you with marketing, make sure that they're dialed in and have that level of data so you can make those really efficient decisions on what you're spending. There was something else that I had in the back of my mind. I guess I forgot it.
We can come back to it if you think of it. Michael, okay. You seem to have kind of done it all. You've Reg CF, Reg A, VC, institutional money, retail money. There's definitely not one size fits all here. What would maybe you can talk about your platform versus self-hosted versus throwing decks out to VCs?
From a cost perspective, is that what you were?
Costs, energy, everything. Yeah. I think you're on mute, Michael.
Thank you.
You're welcome.
Being a good citizen. Thank you. I think it depends on your business. My last company was what I call very VC friendly. It was low capital intensive, rent computers. You could, rent space, pay salaries, low overhead. Quick, low investments in the service. It was very linear business model that could scale to a point, or at least so it looked on paper. And I think for that, maybe you do a CF and then go right to a VC, and that could work. I think it's a lot of work to do an A+ for 10 or 20 million. If the VC really likes you, like, and I raised my money from Sequoia. I spent 2 days I spent 5 days raising money. I spent 3 days in Silicon Valley. I had 27 meetings in 3 days. I got 15 term sheets from managing partners from Norwest to Khosla to Kleiner to Sequoia, and we met with Sequoia. So at that time, that business, I was never going to go stop what I was going to go do and raise for crowdfunding. VC made all the sense in the world. Sequoia had invested in 17 other similar businesses to mine. So they had a lot of expertise too that they could impart to me.
Yeah.
And when it came time to scaling the business, they were terrific. So I learned a lot from them, and especially their conferences. And there are different ways I could have done this one. I could have tried to get government grants to fund energy projects. Those are available. I could have gone to family offices that sponsor only clean tech and green investments. They do a lot of those things, proactively when they like the concept and they want to, many ways you could do it. So I think that for what we do as a company, this process has worked pretty well. We do plan to and are in the process of adding institutional investors now, both family offices now, larger check writers, as well as I mentioned, a major energy company is looking at a substantial investment. We've been working on that for a few months now. I think so. Somebody dovetails into a question a couple of people asked about the perception of a crowdfunded business to the VC community. I think it's still a bit of a mystery to some. There's this really bizarre expression that I heard in VC land starting 13 years ago, and I continue to hear it. It's called messy cap chart. Messy cap chart. You hear VCs saying this all the time. Messy cap chart. Basically, again, there's this kind of, 1950s white picket fence version of how companies are built, where you go outside, you put a lemonade stand out, 3 people give you all the money you need, and you build your company. Well, you might have needed 15 or 20, whatever, or 30. There's no such thing as a messy cap chart unless it's inaccurate. There's an accurate cap chart, that's no good. But a messy cap chart doesn't exist. I think the many companies, not like Republic and others, it's one line on your cap table. So if you get $10 million or 5, it's one line. That's new. So I think that's something that people are getting used to, the VC community, and now they're starting to invest in these deals because what's happening with crowdfunding is that it's another source of capital for companies. That means it's competition for VCs and other investors who are used to dictating terms to companies in a kind of club network. Now that can be set by a larger consortium of investors who can decide what a company is worth. The company can decide its own price, but it's not a random decision. If it's not a good decision, people want to invest in your company. Investors are smart. So, I think it's just at the moment, it's a process where traditional institutional investors are getting used to what all this is. And they're comparing it to things that they know from the past about having angels, which is different from a crowdfunded, regulated, SEC qualified, where you've got FINRA and everybody involved. I mean, to an extent, the angels thing does scare VCs because they have to chase down people all over the world to find signatures, and it's not necessarily a great process for them. So nothing like that. This is completely regulated. You do audits. The kind of due diligence that the VCs on this call are used to, the crowdfunded companies will be 10 times better organized because the SEC makes sure that they are better organized. So it's all part of a learning process, Rob.
Yeah, I agree. And I think you're referring, if you can see the questions, is a question from John. And Paul, I'm going to get to you in 1 second about the cost of marketing. But since we're on this track, he was at a conference for MedTech Biotech where some VCs and other investors said no VC will follow on an investment on a CF funded company. And that, having thousands of investors is not really what they want. And of course, everybody wants what's easier in their eyes. But the bottom line to me is if it's a good deal and they want to invest, they're going to invest. And to your point, Michael, it's really just about organizing the cap table. It doesn't make it any more difficult. But
we're having that situation, Rob, with the investors right now. It's a real thing. They ask that once a company puts in 20 million or 50 million or 30 million or some number, they don't want necessarily hundreds and thousands of other investors around unless there's an understanding of what their rights are that won't affect the business, right? But the nice part about that is that what can happen is that we can take that money and then we can list a secondary on your exchange and let those shareholders cash out as they want to. So, it's a beautiful, that's what's changed. So somebody might have invested, for example, the current situation is if you start a company, you call it $1 a share, hopefully someday you sell it for $20 a share. The VC wants to come in when it's $3 a share. and try to, sell out when it's 15 or so. That's the kind of thing. But now you can actually raise money through that early phase and at reasonable valuations, and then incrementally increase that as it makes sense to ready the business for larger rounds. I think that's really different from before, when you used to get angels and it was kind of all or nothing. And I think that's the thing. Think about this, Rob. My shareholders do not let me fail. VCs let 85% of their businesses fail every single day of every single year. So that means they crush the dreams of 85% of the entrepreneurs who come to them, because the model does not favor the top 2 or 3 businesses they invest in. Whereas when I needed cash to build another version, I went to my shareholders, I explained what I was doing and what I needed to do and who would come on board if I did it, and they gave me the money. They didn't step on my throat or do kinds of crazy things. All these terms I heard, I get this away from me. What's a step on your throat? What does that even mean? What's a cram down? Yuck. Yeah. Cram down sounds like an awful term. Don't use that word around me. Are you my investor? Don't talk about a cram down. So I think it's so much more freeing and liberating for companies to really do innovative things. And the VCs, I think, and the PEs, they're all going to be a part of this, and themselves will end up leveraging these tools. Believe me, I'm sure.
Yeah, it's an interesting point, Sherry. Maybe you can follow up on Michael's point about the AT, alternative trading system. We've done some studies with, I think, the last 100 IPOs, how long it's taking companies to go IPO. That's something that I really like about Atlas, is how early in their stage that they're planning on going IPO. I think the average is 10 or 15 years now. And the success rate of the last 100 IPOs is not favorable to the retail investor. I think you're on mute, Sherry.
Apologies, second time.
Okay.
So that's definitely a trend we've seen with our studies that we've been doing, is that a trend over the last 10 to 15 years is, if you think about Google or Microsoft or Amazon, they went public relatively early in their life cycle, really, when they were still growth companies. And what's happened over the last 10 to 15 years is companies are really going public post all of the growth being taken out of them for the most part. And so by the time the companies go public, there's not much more to come. So what you're seeing from the market reaction is now, from the IPO price, the companies are not doing well. And this is the study that we did was actually prior to the market volatility that we've been seeing of late. So it has nothing to do with the current market volatility. But the general macro theme is that, it's very challenging. And this is something that the SEC saw and was really, the purpose of the Jobs Act and the reason that the Jobs Act opened up the ability for unaccredited investors to invest in companies, private market companies, within a framework. And what we get so excited about, because, it's really a way for anyone to invest in early stage companies and be able to participate in the trajectory of the company and the growth, and be able to, participate while the company's growing and increasing in valuation. Obviously, there are all the disclaimers that may not happen, but there is the possibility for it to happen.
Yeah, I don't think you said it, but if you invest in the last 100 IPOs, you're down about 40% from the IPO price. Paul, I'm so sorry. Marketing, it is just so important, and a question that I get asked all the time, which is an impossible question to answer, is how much does it cost? And I do give the answer that Sherry says. I say, well, it's like saying, how much does a car cost? Well, there's lots of different cars. So sorry for the impossible question.
Yeah, I mean, you can't put a number on it, but I can give you a couple of examples. People like Salesforce, which is a massive brand. There are lots of CRMs out there, and the reality is they all do very similar things, and you probably only use 15% of what the power within them, or most companies will. But they spent 50% of their turnover for 7 years on the chop. to put enough fuel in their brand so that they can own the market. And when you ask anybody which CRM, Salesforce is the most commonly recognized brand. So therefore they get to charge more, they have more customers, and building a crowd is no different. So, we talked about cap table just now. If 4 of those crowd introduce you your 3 biggest customers that are going to give you the lifetime value of the entire business for the next 15 years, that is all that matters. And to me, you've just got to make sure and understand that you enter in it with open eyes and you put enough fuel in at the beginning. I think Annie said some while ago that it's going to cost you more at the beginning. It is, because you've got to get it off the ground. You won't have as much about your business written about your business. Your community won't be as big. So you've got to put more fuel in. And you will have to do that, but you've got to stay credible with your message throughout, and you've got to keep it simple, because otherwise all you're doing is you're sending all those marketing dollars to an empty stadium. And you've got to make sure that you keep the message resonating and credible. And then when you find a dark point in your round, I think Annie said, when you're doing digital ads, you've got to watch and track the data, because data we haven't talked about much, but you do need to invest heavily in data and the numbers. And when you do find you've exhausted a certain message or creative or audience, then you've got to react to that accordingly. But that doesn't mean to say that your round is bombing. It might mean that you've got to spend a few weeks warming up some new audiences with a message that just resonates again, because you don't want your marketing to become wallpaper, but you do want it top of mind. And I think credibility is more important than budget. If you stay credible, you stay engaged, and you watch your audience, and whether it's incremental amounts that you then double up and treble up, as Annie said earlier, then you'll find your way. And then along that way, your customers will follow. And, everybody says it's just full of retail investors. I can actually tell you that the people that go on our data sets are accredited investors. I've got people from sovereign wealth funds that come on some of these webinars that we do with some of our investors, right? So they're all walks of life, but if they don't understand and resonate with the brand, then they're not going to part with their capital today, tomorrow, or the next day. And that's the key tip from my perspective.
Yeah, I agree with everything you've said. We are coming towards the end, so I want to apologize if we didn't get to your questions. We'll do our best to get to you individually, directly. But as for the last thing to the panelists, if you have one piece of advice, and maybe it's a recap of something that you've already said, but if you could give one piece of advice each, that would be terrific. Annie, maybe I'll start with you. Sorry to put you on the spot.
Sure. I would double down on something I said earlier, which is really know your audience and the story you're telling them. And it's going to take a lot of iteration to get to that right answer. But it's worth investing the time to figure that out, because also that's why you're building whatever your business is. So while, yes, it's a tool to raise money, it's also part of telling the story of who you are and what you're building. So it's worth taking the time and really dialing that in and really knowing exactly who you're telling it to.
Great. Thank you. Michael, how about you?
It's a journey. You'll learn a lot. It'd be good for your business if you do it well. And it's also a creative project like any activity. If you do it right, you'll need to apply as much creativity to the way that you do this as you do to marketing and product building and all the other things that you do. And with more and more companies using this method, your creativity and being able to distinguish yourself as a campaign is always going to be, important. So keep that in mind if you choose to do this.
Thank you. Sherry?
So I'm actually going to, because I know people keep asking about the budget cost per month for marketing. So I just want to kind of do I know Paul's going to probably kill me, but I just wanted to, I would say I've seen anything from, 5 to 40. I mean, like those are the yardsticks. It's big. It's a big, I think that's why people don't want to answer that question, because it's a very wide berth that we're talking about in terms of marketing. So, but I just want to throw some numbers out there. So apologies. I hope everyone doesn't mind that I threw those numbers out there, but okay. I just wanted to throw some numbers out there because I saw the questions kept coming up. In terms of last thoughts, what I find really fascinating about this, especially seeing so many companies come through, is that the different communities that are built around the companies and the different ways that those different communities galvanize them, whether it's assisting them with the product lifecycle development, whether it's introducing them to new opportunities, whether it's just being part of their ecosystem. I really feel like it's $5,000 to $40,000 a month. So, and that's for a crowdfund. That's for a crowdfund. And so, at the very beginning, it might be, so that's for a small crowdfund. To 40,000 would be something larger. And
it can go up.
Yeah.
It can go up.
It could be if you're doing a commercial. Yeah, if you're doing a commercial, all bets are off.
Sure. Or I mean, for us, we've had some Facebook ads specifically that the ROI is so high, you just keep going, right?
Yeah, exactly. So, but I just wanted to throw some numbers out there because I know everyone was like, "Give me some numbers, give me some numbers." So, apologies.
Yeah. I will say that I don't think if you go to a gunfight with $5,000 a month,
I know
you're going to come out losing.
I agree.
And the reality of that is, you're trying. You think about the lifetime value. And I know this for a fact with Michael's business, and I'm sure it's the same with Sherry. Issuers will look at it and go, "Well, I spent $5,000 and I only got 7,000 back." Well, nobody's heard of you yet, and you've got no community, and you're asking for a winning lottery ticket or some kind of miracle, right? And miracles don't happen very often. Let's be honest, right? So you've got to put the fuel in there to get that reach of an audience, to build a community, then the repetition. But if you haven't got that simple message, crafting a simple message is the hardest thing of all. You take Michael's business, explaining what a digital twin is. You've got to be able to disseminate something in terms of how somebody can understand it. And that takes a lot of skill and creativity. And that isn't cheap, because it takes a lot of time and brain power. And when you talk about the Facebook advertising or the email marketing or the buying the right kind of data once you found your audience and all the rest of it, you've also got to work out in that first 3 months, you're going to make loads of mistakes, because if you don't make mistakes, you don't know where to go. So I personally, in the first quarter, I'd make sure that I had at least $250,000 to go into this, because the other thing it does to entrepreneurs, it frightens the life out of them. And if they haven't got enough money to put the fuel in and things don't go to plan, they start panicking and they start making bad decisions, and they start measuring success by the day. And marketing doesn't work like that, So you've got to go at it intelligently. Otherwise, you are going to be stuck in that plane in the middle of the sea with no fuel and no idea, and hope that the marketing people are still willing to help, So I tell people how it is, because I'd rather they go into it. I get some people come on calls with us and they don't want to hear it, and you say fine, and they go, and then 6 months later they go, "Oh, I wish I'd listened," and all the rest of it. I tell them don't do it, go down and have a nice meal with your friends, and have a good memory of it, not a bad one. That's.
I think I agree with Paul. I think you got to be very. One thing, just to final comment is you got to make sure that looking at the underlying financial metrics all the time and have total control of the data and see what pieces are working, what pieces are not working, not be blinded by, because you try 5 or 7 things at the same time. And actually, the reason people invest is that, I saw you on LinkedIn, saw you on Facebook, saw you on television. And then that story builds.
Some of the parts.
And then they invent. So I read about you in the New York Times, and and then they see, this is a company on the move. And if you got in all those places, you probably are a company on the move. So I think you have to watch the metrics, watch the data, and you let the data lead. It's a lot like what the pollsters do when they're getting candidates elected. They're watching the data constantly, and they're shifting their attention to wherever they get the most attention. So it's a little bit like that. If it sounds weird, it's how it is. But if you do it right, you can have a tremendously positive impact on your business. And so I'm glad we did in the end, and I'm glad we're still doing it.
But thank you all for coming out with that. I put the low number to get you worked up.
Yeah, don't worry. Only because I just want to make sure people have a clear.
We have companies come to us and they don't want to spend money on marketing, and the issue is that if you don't spend money on marketing, it's not going to work.
Agreed.
Let's look at the most successful business of the last 20 years, Apple. You had a man who people believed in Steve Jobs, and we know he had his failings and all the rest of it, but he built the most credible brand. And I was lucky enough to bring Steve Wozniak to the UK about 5 years ago, and I said to him, so how did you beat all this stuff about you? Was 20 of you in a garage in Silicon Valley? He said, Paul, it's utter rubbish. He said, we had a mountain of money for marketing, design, and all the rest of it. And Jobs used to stand on the stage, and then I had to come up with the tech. He said, but without the amount of the money for the marketing, there would be no Apple. Yeah. And crowdfunding is no different than Apple.
Yeah.
Yeah. It's a huge part of this is the marketing. Thank you, guys. I think that's all the time we have for today. So I'm going to wrap it up. A huge thank you to Annie and Michael and Paul and Sherry for taking so much time and answering so many questions. It's really been fantastic. To the audience, you can reach any of us at any of our websites. The Rialto email is support@Rialto Markets. If you have questions about Rialto, Atlas, City Zenith, we're happy to point you in the right direction. But I just want to give a huge thank you to you guys and for everybody who has joined today. Thank you very much.
Thank you for having us.
Yeah, thanks for having us.
Yeah,
thank you.
Fun. Thank you, everybody. Goodbye.
Thanks.
Bye.